Well, let's focus in on the markets once again and talk a bit about the fundamentals. We have Vinay Paharia, who's joining us from Union AMC. Vinay, hi, good afternoon. Thanks for joining Markets at Lunch on ET Now. Vinay, we are in the midst of earnings season. Several nifty numbers and several important companies have already delivered their Q1 report card. What are you making of the earnings season so far? Could it be a precursor, a trend to something that lies ahead in the next couple of quarters?
So thanks a lot for first having me on the show. As far as the earnings are concerned, it is early days yet. We have large number of companies yet to report the earnings, but from the companies which have already reported, it's a mixed bag out there. So some of the IT companies have reported stellar numbers, whereas we are seeing some increased competitive activity on the auto side. Media companies have reported reasonably good numbers, but importantly, we need to put things in context. When you are looking at the numbers for this quarter, please do not look at the absolute reported growth numbers. You need to look at what has been the compounded 2 years earnings growth, simply because the base period has been abysmally low due to the run up due to the implementation of GST in the base period.
And what do you make of the consumption space? Of course, there was a lot of correction, especially in the mid and small cap names, and but given the kind of relief that a lot of consumer companies are seeing on back of GST rate revisions, of course there's the earnings growth that they are likely to deliver or have delivered already. What do you make of the FMCG as well as consumer discretionary space? How is the valuation looking to you?
Your question has two components. One is earnings growth and second is valuations. As far as earnings growth is concerned, we think that both for consumer staples as well as consumer discretionary, earnings growth would remain robust. Having said that, select pockets of consumer staples as well as consumer discretionary companies remain higher as far as valuations are concerned, and some of them provide opportunity for investment, and hence you have to take an extremely bottom-up call in both these sectors.
Hi, this is Nayantara joining in from the New Delhi studio. So, you're talking about what about the auto pack at large?
Hi Nayantara. As far as auto pack, we have just one two-wheeler company in fact report earnings, and in what they have highlighted is in fact materially increased competitive activity which they are guiding for the coming few quarters, or in fact medium term, and that's not very good for the sector as a whole. So we are watching out that space very closely, but we think that the competitive intensity is on the rise in that segment.
Said and done, the mid caps and small caps really saw a bloodbath since the start of the year. There's been immense volatility. A lot of correction has also happened in most of these stocks. Do you think now the valuations look attractive or justified enough to be bought into, or would you rather advise investors and our viewers as well to actually consider the blue chips over the broader end of the universe?
I think there has been a lot of noise being made out of the recent correction in small and mid cap space. The recent correction has to be put in context. We had seen a monster rally in the entire small and mid cap space over the last 4 to 5 years. In fact, if I were to look at the returns for the respective benchmarks in these categories, small and mid cap benchmarks have delivered almost a 2x return compared to their large cap counterparts, and hence even after this correction, an investor who had invested in some of these names has earned a very healthy return. Having said that, one needs to keep in mind that the nature of this segment, which is the small and mid cap segment, is to have a high risk, high reward category. So this category has a nature of being high risk and high reward, and by a high risk we mean high levels of drawdown can be expected. So this is what we are experiencing now. Having said that, one needs to keep in mind that over a longer period
Vinay.
of time, on a risk adjusted basis, this
Right.
segment.
Okay, thanks much for taking time out to speak to us about what's transpiring in the markets. With that, we're completely out of time on this edition.